Welcome back to Cognitive Dissidents. I'm Jacob Shapiro. I'm a partner and the director of geopolitical analysis at Cognitive Investments. Joining me for our weekly chat on all things markets and geopolitics is our chief investment officer, Rob Larity. Not much from me in terms of notes. If you want to talk to me about the podcast or about what Cognitive Investments does, email me at jacob@cognitive.investments. Otherwise, leave us a rating and review. Enjoy the podcast. Be good to each other. Cheers. See you out there. Cognitive Investments LLC is a registered investment advisor. Advisory services are only offered to clients or prospective clients where Cognitive and its representatives are properly licensed or exempt from licensure. For additional information, please visit our website at www.cognitive.investments. The information provided is for educational and informational purposes only and does not constitute investment advice, and it should not be relied on as such. It should not be considered a solicitation to buy or an offer to sell a security. It does not take into account any investor's particular investment objectives, strategies, tax status, or investment horizon. You should consult your attorney or tax advisor. All right, Rob, the euro is below parity. Turkey slashed interest rates. The Bank of Japan intervened to support the yen for the first time since Third Eye Blind was atop the charts here in the United States. And it's over 100 degrees heat index here in New Orleans. How are you doing?
It's been a long week already.
Yeah, the last 2 weeks, it's just kind of nuts. We were joking, like usually listeners, we sort of, plan out ahead of time very loosely. We're going to hit this, that, and this topic before we end. The list is too long, so we're gonna go down part of the list and see how far we get down it. I guess we should start though, Rob, with the alpha and the omega, and just I don't want to spend too long on it because I think it's been over talked, but I don't think we can avoid talking about the Fed and what they're doing with interest rates. So why don't we just get that out of the way and then back into the more interesting stuff?
Sure. So everyone has seen the headlines and knows what the Fed has done and said and stuff like that. The key takeaway here is that the Fed is coming out and saying, we're going to put the economy into recession. And we realize, or we feel that that's what we have to do in order to get inflation under control. So what you're seeing in markets is you're seeing the yield curve squeeze higher at the short end, even higher than it was. And in the middle and longer end of the curve, actually not do too much. So as I speak, the 10-year Treasury yield is up to about 3.68%. But immediately after the announcement, it really just sort of hovered around. So it's not clear if it's going to retain and hold this level. But regardless, what you're seeing is a deeper inversion of the yield curve. So short-end interest rates are moving much higher now than the longer-term interest rates. And what that means is that the market is seeing that we're going to enter a slowdown and that ultimately interest rates are going to normalize. And that's essentially what the Fed has said, because in their projections, their famous dot plot, they provided their projections for 2024 and showed that they expect to lower interest rates, at some point in the medium term. So that's rippling through markets. And again, we like to look at the divergences here. And the thing that's noteworthy is, despite the thing that everyone was afraid of happening, interest rates through the roof, the Fed squeezing everyone and saying that they're going to put the economy into recession, the stock market, while down, is not making new lows. And especially if you look within the market, the more speculative areas of the market are way off their lows. They're outperforming. So look at the ARK Innovation ETF, the famous Cathie Wood ETF, which holds all of the big, technology and growth names and Tesla names like that. That's well off of its lows. At least last time I looked. Could be putting my foot in my mouth here because things are moving so quickly. But that's a big thing to watch. The other thing to watch is that currencies are still not really making new lows. So the euro is below parity, but it's sort of flirting with the level that it was back at the beginning of the summer, which is really noteworthy because since then interest rates have absolutely skyrocketed in the U.S. and the U.S. is dragging in capital from all over the world as a result. So if you can't get currencies down to new lows and you can't get Kathy Wood down to new lows. I think the takeaway is still that you have to start getting bullish here, especially when you look at sentiment and how things are positioned as far as the way people are feeling. How does that actually make sense? Why would you be bullish? I mean, a potential scenario is that the thing that's really squeezing markets is inflation and fears over inflation and what it means. And if the Fed is doing what it needs to do, so to speak, and we could talk about potential policy errors and things like that, I can see a scenario where the market breathes a sigh of relief that inflation is not going to get out of control. So that's one potential explanation for why we're not, 20% lower on the S&P 500 than we were back in June.
Mm-hmm. I feel like the euro parity thing is one of those things like we're going to look back in 10 years at the chart and it's going to look really weird that the euro dropped below parity at some point. Like I think it's going to be a real anomaly going forward. But then again, I always question myself when I feel confident about something because I very rarely do. And the more I look at the euro, the more confident I get that people are just misreading the situation in Europe right now. But yeah, I don't know. I mean, to your point, I mean, you mentioned the Fed sort of thinking it can lower rates maybe 2024. They also thought, I mean, they've been wrong every step of the way, haven't they? I don't think the Fed has appropriately predicted what was going to happen next at any step of the way. And it doesn't seem to me that they're going to be able to get inflation under control. They can make money more expensive, but they can't actually make goods cheaper. It doesn't seem to me. I did notice today, I don't know if you saw this, the Biden White House came out and said they were not going to impose an export restriction on some kind of rare earth element magnet that was coming out of China. So maybe some kind of reprieve in U.S.-China trade relations. I've been waiting on that to sort of knock at inflation before. But yeah, I don't know. That's a little bit rambly. But do you have any confidence in the Fed's prediction that it's going to be lowering rates in 2024? I don't want to compare the Fed to the Turkish central bank, but in terms of record of prediction, it's it's not exactly that much better.
I don't think the Fed has any idea what it's going to do. And if you look historically, its forecasts are complete noise and meaningless, wastes of time, which isn't their fault. I mean, I think most people's forecasts would be. But the key thing is not, they're saying they're going to do this 2 years from now. Let's hope it happens. The key thing is what they're trying to tell us now about what they're thinking now, which is, hey, we're going to do this, and then things are going to go back toward normal. Like that's our commitment. So that is worth noting, even if the forecast is inevitably going to be different or totally wrong. Mm-hmm. I could see a scenario where rates are, back at 2% 18 months from now, which would be 100 basis points lower than they are today. And you mentioned, the Fed can't do anything to reduce inflation, and we talked about that last time. Inflation is already starting to go down. Mm-hmm. I know that sounds weird because the latest numbers don't show that, but you have to look forward. The price of shipping goods across the ocean has absolutely collapsed. Mm-hmm. The price of industrial metals has absolutely collapsed. The price of steel, Midwestern steel futures were $2,300 a ton. I'm going to get my units of measurement screwed up here. Back in mid-2021, today they're $800 a ton.
Yeah. Well, and you're talking about the U.S. CPI print was hot. The Canadian CPI print that came out this week was actually, prices fell a little bit. So it might be just something in the United States in the CPI print that we're missing, because some of our other signals are showing inflation actually turning around in some of these markets. So,
well, one of the big things here is housing. So Canadian housing has already started to roll over. I think that's helping. U.S. housing has not started, but it's going to. So right now, the 30-year mortgage rate is 6.3%. The mortgage applications, the volume of applications has fallen off a cliff. It's down back to 2015 levels. So people are not buying houses. And yet at the same time, there's a massive number of homes coming down the pipe. the biggest number of homes currently under construction since 1973. And in 1973, you had the baby boomers all buying their first house. You're not seeing that today. Population growth is near zero and pushing to negative in the near future, for a whole bunch of reasons that we could talk about. So housing is by far the largest component of the CPI. And it's not an exaggeration to say that a tidal wave of supply is coming. So that's the biggest component. And then all of the traded components and goods aspects are, starting to really decline, which we talked about with the metals and commodities. Target came out this morning and said they're increasing the promotional cadence, which means basically how aggressively and how early they discount for this holiday season. They're going to start it in early October, which is, so much for Black Friday. Jeez. So, all of these things are coming together to suggest, the other thing is labor. So the biggest driver of inflation, not related to housing and not related to goods, has been just services inflation. So restaurants, food, hotels, that's coincided. A labor shortage has coincided with a boom in pent-up demand because of COVID. And that appears to be topping out. And if you listen to what some companies are saying on their conference calls, a lot of companies appear to be saying that they think the worst is behind us, that it's not that the labor situation is dramatically improving, but that it's not getting worse, and at the margin, it's getting a little better. So all of these things are going to drive down inflation significantly. I think what happened, I think if we look back 2 years from now and say, oh my God, how could they have been so wrong and being so worried about inflation? I think essentially what happened was you had the beginning of a slowdown earlier this summer and in the spring because of gas prices spiking, and consumer indicators started to roll over hard. And then as the gasoline price, reverted back toward normal, you had a reacceleration during the summer, right when you had this pent-up boom for travel and experiences and concerts and all this stuff. So you had this big reacceleration in the economy, and the Fed said, oh my God, this is a real worry. Things are really getting heated and off the rails. And I think that's where the head fake will have been seen to have arisen.
Yeah. All right. Well, that's enough about the Fed. We have a menu of things to talk about next. We could talk about Europe. We could talk about Turkey. We could talk about Japan. We could talk about Putin talking about partial mobilization. Where do you want to go next, Rob?
Well, I'm sick of talking a little bit. I want to hear you talk about Putin and the mobilization, because on Monday's podcast with Sim, you guys spoke about this, and Sim expressed some doubt that they would do this because he thought it was stupid, and now they've done it. So what should we think about that?
Yeah, my answer with the Russia stuff right now, I'm solidly in the camp of I don't know. I don't know what Putin is thinking. I don't know what the Kremlin is thinking. I don't know what the strategic worldview is. The best thing I can come up with is that they're trying to put pressure on Europe to give up the sanctions and to put pressure on the Ukrainians to sue for peace. And I just don't think that strategy is going to work. If you're Putin and you want to move that forward, talking about nuclear weapons. I mean, Medvedev was out today talking about nuclear weapons too. I mean, they're all sort of, beating the drums of war. But then, I mean, you wake up this morning and we get this news of a massive Ukrainian-Russian prisoner swap that was negotiated by Turkey and Saudi Arabia as the intermediaries. And so now like 300 prisoners have been exchanged between the two sides. So which is it, Putin? Are we gearing up to use nuclear weapons, or are we going to exchange prisoners back and forth? Even with the energy cutoff things, like they cut off Nord Stream 1, but some of the other pipelines through Ukraine, or I think it's Turk Stream or whatever, Europe is still getting some natural gas from Russia. A lot of the models that are predicting energy crisis in Europe are ones that assume a complete and total Russian shutoff. They haven't completely shut off everything. They talk a big game, and they've shut off Nord Stream 1 and they've caused problems, but they're not going kind of all the way. So I don't really know what to make of what Putin is doing. And I said this to Neil, who that podcast is confusingly going to appear after this one. But I don't. I think in some ways the macro environment can't stabilize until we get some better sense of what Russia's doing. They're holding in many ways commodities a little bit hostage because of their complete volatility and unpredictability. Because like I'm prepping to go talk to an audience in Ireland in a month's time, and they're a feed importer basically in Ireland, and I'm thinking about agricultural commodity inputs and things like that. And I literally can't plan a month out what the talk is because I don't know where the Ukrainian defenders are going to be and whether the Russians are going to have shot off a nuke. I mean, I feel like people usually come to this podcast to listen to at least some degree of certainty or enlightenment. For me, I have none. None of what Putin is doing makes any sense to me whatsoever. It seems to me he's just shooting himself in the foot.
But what about the Europeans? So if Putin doesn't follow any rhyme or reason, how can we watch them and what they're doing for insights?
Well, the Europeans are in some ways the most interesting thing. And the more I look at Europe, I mean, the more bullish I get. I challenged myself this week to really look at the sort of natural gas consumption trends in Europe over winter, over time, and whether they had enough natural gas or enough energy sources to put it together. And again, I don't understand where all the doom and gloom is coming from. Like, there's going to be a significant challenge, and there's a couple of countries that are particularly exposed. Germany happens to be one of them. The Czech Republic is a big one that depends a lot on Russian natural gas. Hungary is another one. Even Italy and Slovakia, when you get on the margins, these are countries that bet a lot on Russia being a provider of natural gas, whose economies themselves are gas intensive because of whatever industries that they have there, and because of where they are. I mean, with the exception of Italy should be able to have planned for this better, but they didn't. But with the exception of Italy, I mean, Austria, Slovakia, Hungary, we're talking about, Central Europe in the middle of the continent, harder to get to the coast. The pipelines aren't built all the way out. So they don't have a good way to sort of shift to alternative supply. But if you look at the rest of Europe, I mean, they're all going to cobble it together. I mean, Spain built a bunch of LNG import terminals. The Dutch and the Germans and the Finns and the Estonians have their own floating LNG terminals. One of the stories I've focused on this week was the Indonesians are gearing up to export more coal to the Europeans because they're gonna increase coal-fired plants or power from coal-fired plants. There was a report, I think it was Politico had it, that as the European energy ministers all debate about what kind of taxes they're going to put on utilities and power companies and things like that, they're talking about exempting not just the renewables from some of these more onerous taxes, but also coal. It's like basically anything that is not Russia that you can get from not Russia, they're going to exempt from the taxes. Like now we're talking about a continent that is getting serious about alternative supply. So I don't mean to make light of it. Like, I think Europe is in for, a rough couple of months, but their storage levels are going up. Everybody is looking for alternatives and is having some success in finding them. And it just seems to me like they're going to be able to get through all of this. And I don't really understand the narrative of, that European civilization is going to end here in the next 3 to 6 months, even if you have a colder winter. And the last thing I'll just say there is this is in this week's Global Sitrep if you guys want to look at it, but there's a lovely Eurostat chart. So that's the European Union Statistic Agency that they have a great chart that shows you heating degree days in the EU for the past 40 years and cooling degree days. So let's leave out cooling degree days right now because we don't care. But if you look at the trend for heating degree days in the European Union, we can thank global warming for the fact that it's been trending generally down. And also because the power systems are more efficient, they've just been, there's less need for these heating degree days. So since 1999, there have only been 4 years where there were heating degree days in Europe that were lower, where there were heating degree days in Europe that were higher than the average. So 2001, 03, 04, and 2010. So I'm not a weatherman, but I can look at that statistic and tell you, okay, like to get a bad or a worse than average winter is something that really hasn't happened that much, and the trend is going away from that. So you put all those things together, I don't know. I continue to feel good about Europe, and I don't know what I'm missing.
It's interesting because on Bloomberg, I don't know if you've seen this, they have the news feed, and then when something's really important, they have the feed. It's all in red, and it flashes at you. So no matter what you're doing, you're bound to pay attention. And the thing that hit this morning was the Dutch statistics agency released the consumer sentiment number, and it was the lowest ever. Literally, it goes back to like 1978, and it was way below any level reached in that time, which is kind of crazy to think that really this is the worst moment for people in the Netherlands since, the late 70s. But that was what they chose to highlight. And, we were talking about this earlier. We were digging into some of the other data, and it's kind of interesting because despite that, just take the Netherlands, spending in the Netherlands, household spending was up 6.2% in the most recent month, which was July, year over year. And we don't have the numbers for September yet, but they have sort of a dashboard where they monitor near-term changes, and it looks like it's going to be a little lower than July, but still fine. So there's this interesting dichotomy between what the media is saying, the drumbeat of negativity and bad news, and people's response to surveys around sentiment and things like that, versus what they're actually doing. And similarly in France, we've talked about this. France also has seen consumer sentiment drop. Earlier today, the French business confidence numbers came out. So what are businesses actually seeing, and what are they doing? Not consumers, who tend to be a little gloomy over there, in case you didn't know. And businesses remain very upbeat. So the outlook for French business is holding near decade highs, which is incredible to think when you think about the environment. And French, the service activity index came out. So basically, how much growth is happening in the services side of things. And that is also near the highest level since 2010. So there's a weird disconnect here, and I'm not sure what to make of it, but it seems like the underlying fundamentals are much, much stronger than reading the newspaper would make you think.
Yeah. And I mean, Russia's much, much weaker than we thought even 3 weeks ago. And the weaker Russia is, the more leverage Europe has in this whole geopolitical situation. Like, it'd be one thing if Russia was calling the shots and conquering territory and, declaring these referenda and integrating these new Ukrainian territories into the Russian Federation on their own time. That's not what's happening. And I mean, it seems to me that the longer this goes on and the more leverage that Europe develops, especially with the Ukrainians kicking the Russians' butts, I don't know. It sounds good to me. That maybe, though, is a good segue into getting into Turkey is not really Europe, but it's on the edge there, and they're doing their own thing, aren't they?
Well, there seems to be a lot of pearl clutching in the media about the fact that they would have the gall to lower interest rates. It's a little funny to watch, I think.
It is funny, and the media also keeps saying that the Turkish lira is going to collapse inevitably, and that the Turkish state, that the government can't handle it. And I mean, inflation's over 80%. I would have thought we would have hit some kind of guardrail too here when it comes to Turkish politics, but it's not happening. The inflation keeps on going up, and the Turkish central bank keeps on saying, no, inflation's going to start going down here really soon. Just you wait and see. And then slashing sort of interest rates accordingly. I don't know if they're just making words up to justify their position. I thought it was interesting that in explaining why they cut 100 basis points, they said that they felt like they were having lagging economic indicators on economic activity in the last quarter, and they felt like they needed to support industrial production and employment. I don't know if that's just a naked way of Erdogan saying, I've got elections coming up next year, I need to grease the wheels for my cronies and make sure that everybody has jobs, or if Turkey really is looking at the economy and saying, the inflation is not what's important right now. What we need to do is make sure that we can keep surging industrial production and keep people employed, because eventually this inflation thing is going to turn around. They're now saying December is when they are expecting a quote unquote sharp downturn in inflation. Now, they've been saying that literally every month since the beginning of the year, but I don't know. They're definitely challenging economic orthodoxy, and so far the unorthodoxy I wouldn't say it's done well for them, but it's also, they haven't collapsed. The Turkish economy is still doing really well. And one other thing is that Turkey's they're a big energy importer, but there was a story this week about they're getting close to completing the pipeline lane for one of their major gas field finds in the Black Sea. And if we're, 6 to 12 months away from Turkey being able to start weaning themselves off of Russian natural gas or Iranian natural gas and having their own supplies, I mean, now we're talking about an industrial economy with, easy monetary policy that's stealing market share from Europe in some ways, that might have access to cheap energy. I mean, the politics look scary, but the fundamentals, if you can get past the inflation and the unorthodoxy and the pearl clutching, still look enticing.
I think Turkey defies conventional explanations, and I'm not sure how to explain it. We still have a moderate size position in Turkish equities, which has actually worked out really well because they've kept the FX exchange rate pinned while the equities are reflecting a lot of the inflation that's happening within the country. But one thing that I think people forget about is Turkey has operated, with the exception of a 10 or 15-year period when they pursued very, stringent and orthodox fiscal policy because they were anticipating entering the EU. But with that exception, most of the last 75 years, they've experienced ongoing and high inflation. And over that time period, they've closed the gap with the developed world in terms of GDP per capita. They've grown at an average of 3% per annum at a pretty steady rate over most of that period, which is pretty extraordinary when you think about it, because we would assume that with high inflation like that, they would just be an Argentine basket case, but they're not. So they figured something out, which isn't to say that Erdogan isn't cutting rates and doing these things for political purposes, but I don't think it works the way we all assume it works in Turkey.
Yeah. Before we leave that part of the world, I don't have a ton to say about this, but I think we should just mention it. Iran not looking good the last week or two. I didn't even put it in the sit rep last week that there was a 22-year-old Kurdish woman who died in police custody. The police claim she just had a heart attack, basically. But, local media reports and social media said she was beaten by these police officers for not wearing a hijab, a head covering, and that's why she died. And you saw some reports last week of some protests in response to that, but I never know what to make of media reports about protests in Iran when they're not confirmed, because the West has such an axe to grind with Iran. But it's gotten so bad this week that Iran can't hide it, really. The IRGC came out warning that it was going to punish anybody who spread false news and rumors. You're starting to get videos from several Iranian cities of like direct violent clashes between protesters and the police themselves. So Iran's actually shut off the internet in some cities as well in the country. So that gives you a sense of how bad things are, because they don't want things getting out. So I don't have any insider information here, but I've been banging on the drum for a long time about what higher food prices and commodity prices and all these sorts of things are going to mean for some of these countries in the world, sort of Arab Spring type vibes. And I don't know, Iran's been here before. I mean, in 2019, they had similar kind of protests that eventually went away. But I think we'd be remiss if we didn't just point out Iran is simmering this week in a way that is pretty eye-catching, even as their president is in the UN in New York making headlines. So I don't know if you have anything to add there, Rob, but that's just something on my radar right now.
I don't, other than I'm curious how you think about the probabilities of these things becoming meaningful when the backdrop is very high food prices, as opposed to 2019 when that wasn't the case, or 2015, or it was 15, right?
Yeah. I mean, we've had a couple instances with Iran here, but they also did have high food prices back then, and water scarcity issues, and a whole bunch of other things. That's what happens when you isolate your economy from the West, from the rest of the world as much as the Iranians have. So I don't know. I like I said, Iran is one of those countries that it is very, very difficult to get real objective information on. So I try not to make too many calls about Iran, because if you start calling, like, oh, like this is the moment, like the Iranians are finally going to throw off the thuggish, theocratic regime of the mullahs, like, it's happened multiple times, and there are a lot of folks out there who, for political reasons, want to make it seem like that's what's happening. So I'm not there yet, but I will say, when it gets bad enough that the IRGC is putting out statements that are getting quoted in Western press like that, and when you get these videos of, no, they're actually clashing with the police and their cars on fire and they're going after police stations. I mean, this is a step above kind of anything that's happened, I think, in the last couple of years, and it's worth keeping an eye on. But I don't have any more insights to offer besides that.
And while we're in this region of the world, I just want to ask you, Uzbekistan, I know you've written and talked about it. We were discussing it internally this week with these rail lines that they're exploring. Any updated thoughts on them, or do you want to just remind people why they should care about Uzbekistan? It's easy to lose it in the shuffle here.
It certainly is. So Uzbekistan is made headlines, I think, in most of the Western press, because they hosted the Shanghai Cooperation Organization meeting last week, where Xi and Putin had their chat, and Modi was there throwing some shade at Putin, and a bunch of Central Asian states were there. I was in Uzbekistan right before the pandemic too. That was a really interesting, kind of eye-opening experience. When you look at a map, you think of Kazakhstan as the biggest and most important country in Central Asia, and Kazakhstan has a lot going for it. It's got a lot of energy supplies. It's a major wheat grower, but it's not the most populous country in Central Asia. That's Uzbekistan, and the way the Soviets drew up all those boundaries in Central Asia to pit sides against each other. Uzbekistan is one of, I forget what the other countries are. I think Liechtenstein is one. There's like a very small number of countries that are double landlocked in the world, and Uzbekistan is one of them. So they're not just landlocked. You have to get through 2 rings of countries before you get to a body of water with Uzbekistan. And normally that sucks, but Uzbekistan is also, it's the connective tissue that makes Central Asia actually work. So if you take Uzbekistan out of Central Asia, it doesn't work as a region. And so for all of their problems, they've got water scarcity issues. They don't really have a ton of energy of their own. They're dependent on their neighbors for those sorts of things. If Uzbekistan is going to be open and is going to try and ease, commerce or migration flows or all these other things between these countries, it's important. If you want to think in terms of China's One Belt, One Road initiative, it's a lot easier to make that work if you have Uzbekistan kind of calling the shots there. So I don't think a ton has changed with Uzbekistan. They've been more open to the West and to sort of normal commerce than they have been under their new president. It seems like they're batting their eyelashes at China a little bit more than they were before. But if they're going to succeed, they in some ways they get to, like, their strategy can be a little bit like what Turkey's looks like. They want to be friends with everybody. They want to be the connector, and they want to be able to reap the benefits of being at the center of all things. So that can be a tricky strategy if the powers around you are clashing, and Uzbekistan happens to be around a bunch of powers that have conflicting interests. But if you can play those cards right, like Turkey is. I mean, think about what Turkey is doing today. They are mediating between the Russians and the Ukrainians. The U.S. came out and thanked Turkey for the things that it's been doing in the context of the Russia-Ukraine war recently. There's just sort of playing all sides. Like, Uzbekistan can play that blueprint, but the flip side of that is, if Eurasia is going to be just a geopolitical mess with all these wars all over the place, and I mean, lost in the Russia-Ukraine conflict, Kyrgyzstan and Tajikistan took pot shots at each other. 100 people died in what looked like a little tiny skirmish. They have a ceasefire now, but that happened this past week. Armenia and Azerbaijan are taking pot shots at each other again across the border there. We've already talked about Iran's protests, and then you've got Russia, Ukraine. Very hard for any kind of unified sense of Eurasia and for Uzbekistan to work its magic if Eurasia is going to be that conflicted. So that's probably more Uzbekistan than any listener ever wanted. But if there's something else you want to talk about Uzbekistan, Rob, let me know.
Well, I just found it ironic and interesting that in the same week that everyone is so focused on Russia and Ukraine, that quietly Uzbekistan seems to be pushing forward and planning these rail routes that bypass Russia and connect China to Turkey and through Turkey to the EU. which is sort of getting to your thesis about Turkey becoming more of an important conduit, connecting East and West.
Well, all of these countries becoming a more important conduit. I mean, this goes back to the Russia's failed strategy thing. They're just getting completely isolated. Nobody wants to deal with them. Everybody's thinking about how to bypass them. Yeah, and like the world, yeah, I think the Russians think that the world needs them and their commodities, and like yes, if like Russian commodities went offline tomorrow, like there would be some major problems in the global economy. But there are ways around Russia. It's not like they're, well, I don't know. I don't want to get too sensationalist there, but let's just say that I don't think Russia is powerful as it thinks it is, and we're seeing that in Ukraine. But to your point, for an American audience or for English-speaking audiences, the places where Russian power really is receding in a very real way, we're seeing it in Central Asia, we're seeing it in the South Caucasus, we're seeing it in the Middle East. I mean, the Russian influence is getting rolled back there right now, and China's there, India's there, the U.S. and the European Union to a limited extent are also there. Turkey is certainly there. Russia really is shooting itself in the foot, not just in Europe, but along its entire periphery. So, all right. Well, that's Eurasia.
Shall we move farther east or zip around to another part of the world?
I think we should move farther east. I don't know if you want to start with Japan or China. We should probably start with Japan. I mean, finally intervening to prop up the yen. That seems like a pretty big deal, no?
I suppose so. I think they've verbally intervened many, many times before this. The Japanese monetary policy is just coming under strain for all the reasons that we talked about before. And at this point, they are persisting in keeping interest rates and 10-year JGB, Japanese government bond yields, essentially pinned to the floor, which means that there's really no market. Market participants just aren't buying and selling. So if you look at the Japanese government bond market, which is an enormous market because there's a massive amount of government debt outstanding, really there's only one market maker, and that's the Bank of Japan. So liquidity has sort of come out of that market, which makes it a little harder to keep things pinned, but they can do so essentially as long as they want on the long end. The currency is obviously a different matter. And, as U.S. interest rates go up, because Japan has an open capital account and capital can flow in and out of the country, people are chasing the dollar and selling the yen to do so, to capture the interest rate differential. So they're going to have to deal with this until and unless U.S. interest rates come off the boil again, which is not going to happen in the short term. But I wouldn't underestimate their determination to stick to their policy. So go ahead.
Yeah, no, because I was struggling with this morning myself, and the other thing that happened today in Japan, which I think got overshadowed by the intervention with the yen, was that their core CPI or their inflation rate in August went up to 2.8%, and the Japanese target is 2%. And when asked about whether the Bank of Japan would intervene and whether they would continue with their dovish monetary policy, I mean, all the Japanese officials, including the Bank of Japan governor, said, "Look, like we don't have high inflation here. There is no reason that the Japanese economy should be doing what everybody else is doing because we're not dealing with the same inflation rates." But if inflation, I wonder what you think of that 2.8% print, because that sounds nice here in the United States, but that's a significant acceleration in Japan going forward. And it seems to me the thing that would make them reconsider their policy stance would be if inflation started rearing its head in Japan itself. And it's kind of remarkable that it hasn't already. You would think that a weaker yen would drive up the cost of importing all the energy and other materials that they're so dependent on to keep the economy going, and it hasn't been there. But I don't know. Am I making too much of that print? That came off the page to me a little bit.
I think we have a little Western bias here as well, because we're used to thinking about the Federal Reserve, which has a mandate to maintain employment and keep prices at a reasonable level, to keep inflation at a reasonable level. I mean, it's a very populist mandate. And I think the people at the Fed genuinely want to do what's right by the American people. Like, that's just kind of how, if you look at, Jay Powell and his background and people like that, that's their MO. I don't think Japan really works quite the same way. These guys have been trying for a very long time to kick Japan out of its torpor, so to speak. And they're less concerned, I think, with short-term measures of inflation, or what they'll view as short-term measures of inflation driven by food or energy, because their overriding goal is to create a self-reinforcing cycle of inflation expectations rising. They want to create what the Fed is so scared to avoid. They want Japanese businesses to start thinking that prices are going to be sustainably inflating and wages to grow in accordance with that. All of the things we view as problems, they view as the promised land. So I don't think that they're too concerned about capping prices for those reasons. I don't think they want things to get out of control. But I think they certainly view this as a positive in many ways. They had done a lot of work to reaccelerate the Japanese economy prior to COVID, and you were starting to see a reacceleration in investment and CapEx and all these measures. And if you read the actual statements and the presentations that the bank gives, they are very careful about pointing this out and say, look, it was working. It was working, and then we had COVID. So I don't think they're going to give up on that. I think they view this as, the necessary fuel to get that going again. And I think it's extremely bullish for Japan. And maybe that's part of the explanation for why, as we've said multiple times, Japanese stocks appear to be breaking out of this 30-year kind of downtrend and trough, which is probably the biggest story in global financial markets of the decade. And we always forget about it because no one cares about Japan, of course, right at the bottom, probably. So no, I don't think they're going to change their tack unless they're really forced to by some dramatic change in the circumstances. And the way things are trending now, it doesn't look like we're going to get such a dramatic change.
Yeah. Japan also it's so, just because of the way they're so dependent on imports and the way their economy works, they seem like a more geopolitical country than most. And the geopolitics around them you can find these types of stories every week, and I track them sort of every week. But, a couple that sort of have stuck out to me just recently. Last week, the new Japanese defense minister met with the U.S. defense secretary and talked about strengthening Japan's defenses, including a first strike capability against enemy bases in case they were launching an attack against Japan. I thought that was pretty remarkable. I mean, the idea of Japan preparing a first strike capability, even though they have this pacifist constitution, that tells me something's changing with Japan. And then just this week, there was a report that Japan's Ministry of Defense is considering overhauling how it categorizes defense spending, and that they want a broader part of that budget to go towards scientific research and space and cyber programs and all other sorts of security challenges. So that seems to me to be a way for the Japanese government to actually point, spending and investment in some of these areas where it wants to be a leader. And then more from the bottoms up category, there's Daikin Industries, which houses air conditioned, thankfully, in this 100-degree New Orleans heat by a Daikin unit right now. They're talking about establishing a supply chain to make their air conditioners without any Chinese-made parts by March 2024. They came out and said that this week, I should say. And I thought that was pretty remarkable. March 2024 is going to be here before you know it. And they were talking, some of it was about reshoring to Japan. They called out Malaysia as one country that they were looking at. But I'm always looking for ways that Japanese manufacturers are actually trying to diversify away from China, because Japan has been part of the Chinese growth miracle here for the last couple of decades. And if they're going to make that shift, that could be really interesting too. So I don't know. Does any of that stick out to you? I feel like you can find these types of stories littered throughout the press, and especially Japanese media, if you look closely enough every week. But those were three just kind of all around the same time that really struck me, especially that last one about moving supply chains completely away from China within basically 2 years.
That's been a major trend and one to watch in Japanese businesses. Not only the diversification of supply chains away from China, but just the amount of capital they're allocating outside of Japan. Because the problem with Japan has been that demand isn't growing because the economy or the population is flat to down. So there hasn't been much of a call to lay out capital in Japan for that reason. But you're really starting to see this accelerate where big Japanese businesses are sort of empire building in a way that they really had not. And I don't know, maybe they see the growing, I don't want to say weakness, but problems of China as an opportunity to do this more broadly. But I don't know. What do you think?
Well, it's difficult for them. I mean, it's obvious. It's an obvious comparison to compare Japan to Germany, but Japan didn't have what Germany had. Germany had the rest of Europe that it could serve as the economic center of, and as the European Union grew, then Germany had captive markets for German products, and it was able to find cheap labor in countries that were next door to become the sort of major exporter. Whereas Japan didn't have, 27 other countries around it that could depend on Japan for those sorts of things. It had access to the Chinese market and was able to use that to a certain extent. But yeah, I mean, I guess part of what's missing from Japan's growth story, and they had an amazing growth story, was they didn't have sort of the captive markets that Germany did. And to your point, we can call it empire building, we can call it diversifying your supply chain. It sounds like kind of what Japan needs is it needs to be able to sell into these markets abroad and find cheap labor there and build the sorts of things that Germany got out of the European Union to push forward. And if you're going to do that, you're going to run into China, and you're going to have to be able to defend yourself from China and depend your supply chains from China. And that's a tall task for the Japanese going forward.
And yet I see the kind of bigger trends moving in Japan's favor in terms of which industries are growing and which are growing less. So Japan is not particularly strong in software. They're not particularly strong in consumer electronics anymore. They've lost, their edge there. And yet they're very strong in robotics. They're very strong in capital goods. And those are two areas that I think are growing dramatically. The very fact that Toyota and Honda are such global giants still, even though, Canon is not what it once was, and Sony is not what it once was. I think it says a lot about that part of Japan's economy and how strong it really is. Companies like Fanuc, which is the poster child of, Japanese robotics know-how. That's going to be a major growth area. And it already is, if you look at how quickly these robots are being deployed and how quickly they're advancing.
Yeah. Well, Japan has always been at the forefront of these things, in part because, everybody's talking about LNG right now. Most of the world didn't think LNG was going to be viable until really the late 90s, early 2000s. The Japanese were the only exception. Like, Japan was basically the only market for LNG up until the late 90s and early 2000s because they had no other choice. So they were way ahead of the game on that. So in some ways, I wonder from an energy perspective what Japan's going to do next, because now that you have all this competition in the LNG spot market right now with what's going on in Russia, Ukraine, I assume they're already thinking kind of to what's next. I know we want to hit... Oh, sorry, go ahead.
I was just going to say, that's why I find it so intriguing, Toyota's intransigence, quote unquote, about hydrogen, because they've been unfashionably, devoted to keeping hydrogen as a meaningful option for them, even while everyone else has jumped very clearly on the battery electric lithium ion bandwagon when it comes to autos. And given their kind of history and innovation around energy, I don't know, that it's just something to put some weight on, I think.
Yeah. Before we end, Rob, I mean, the obvious thing would be to talk about China here, but let's not do the obvious thing. Let's talk about Brazil, and I'm sure China will come up in the course of talking about Brazil. So I know Brazil's always on your mind, I think, because you have a little crush on Brazil as a country. But what's on your mind about Brazil right now?
It's true. Well, when are the elections? In 2 weeks?
The first round. Yeah, the first round are in 2 weeks.
All right. So this is topical. It's not just me, indulging my love affair with Brazil.
Oh, no, not at all.
The thing that caught my eye about Brazil, as I mentioned last week, was the economic data coming out on economic activity booming. So the economic activity index, which comes out monthly in Brazil, is at its highest level since 2013. So that's a real departure from what people think about Brazil right now and what people perceive to be the situation in the country. So I think the interesting thing about Brazil right now, and I've done some digging into this over the last few days, just to really think carefully about what's going on, because I haven't looked at this in a while. But it's pretty extraordinary what's happening in Brazil, and I want to flag this, and we can bookmark it and come back to it in more depth in the future conversations. But I'm going to say right here, after doing this recent round of work, I come away much, much more bullish on Brazil than I was 2 weeks ago. And we've talked about being concerned because obviously we're very cautious on what's happening in China and the Chinese housing-driven, fixed asset investment model and demand for commodities and all that. I'm less worried about that when it comes to Brazil than I was. And let me tell you why. Something's happening in Brazil, and it's not about commodities, because if you look at the actual mining sector of Brazil, it's basically gone nowhere for the last 5 years. It's totally kind of crapped out at a low level. And the same for food. Food prices are obviously high. It's been a help, but that's not the story either. The story in Brazil has been services. And when you look at that overall economic activity indicator booming back to 2013 levels, it's not ag and it's not commodities, it's services that's driving it. And that's really, really intriguing. I'm not sure exactly what's causing that. And I have some theories, though, because this is why it's helpful to do sort of bottom-up, micro, deep work, because one of the themes we've been really exploring deeply on the equity side has been the changing financial situation in Brazil, so financial technology. And Brazil has been a fintech powerhouse. So there's e-banks, there's the Pix payment system, which has absolutely taken over the entire country. It's been transformational. And if you're involved in markets, you're involved in the global economy, and you don't know what Pix is, you have to go look this up right now, because this is a huge development. Pix is essentially the government-backed payment protocol that makes person-to-person and person-to-business payments effectively instantaneous and extremely low cost. And that appears to be having a major impact on what's happening in Brazil. So I said this was topical, and just today, the Brazilian central bank came out and they kept interest rates unchanged at 13.75%. So think about how high that is. And they signaled that they might be, more hawkish. They're watching inflation very carefully, and but essentially, it's the end of the rate hiking cycle. And I think it's interesting to look. The last time interest rates were 13.75% was all the way back in 2015, when things were really going off the rails in Brazil, and the economy was in a deep recession. So this was like, right around post-commodity boom. This was Odebrecht, Lava Jato, everything starting to blow up, all of that stuff. And the difference between now and then is shocking in terms of interest rates that individual households pay, that businesses pay on everything. So Brazil has always been famous for having this huge cost of capital, this huge cost of doing business, because money was very dear there all the time. And that's really changed. So if you look at the spread, and I don't want to get too technical and wonky here, but the spread between the central bank's rate at 13.75% and what consumers pay on credit cards, what businesses pay for working capital, was enormously wide back in 2015, the last time we were here. So if you look at, for example, people were paying 60% on their credit cards back in 2015. Today, with interest rates at the same place, they're paying 20%. Businesses were paying 30% for working capital back in 2015. So in other words, if you had receivables in your business, you're waiting to get paid, and you had to finance those, you would have to pay 30% to get the money now instead of waiting to be paid by your customer. Today, it's 18%. And I know that's a lot of numbers and it's really boring, but that's a revolution in the cost of doing business, and you can see it in the surge of services activity. Something really good is happening in Brazil, in the ordinary small business everyday part of Brazil, and that is very much being overlooked because everyone is focused on commodities. Everyone's focused on volley and iron ore and soybeans, and those things are still important, but this is the thing to really focus on, I think.
Well, if I could play a little devil's advocate, because one of the things I was looking at this week was I was trying to figure out why, if the economic indicators are looking better in Brazil, why are Bolsonaro's poll numbers? He's doing a little bit better, but he's not doing a ton better as you would expect, and it still looks like Lula's going to run away, especially with the second round of the election. And one of the things I found was that even though inflation, especially energy, has come off the boil a bit for Brazil, the lowest income groups in Brazil are paying much higher prices for food still. And those food prices are actually creeping upwards still in general. And so one of the things that I read was theorizing that the reason Bolsonaro's not seeing any benefit is because Brazil's had inflation. The stimulus checks that went out have not been helping because they haven't really been keeping pace with inflation, and sort of those low income groups are actually paying more for basic staples and even having to go into debt to pay for basic staples right now. How does that fit with what you're laying out here? Because it seems to me that one of the reasons people are not supporting Bolsonaro is that pressure on the lower income groups.
Well, that's definitely an issue, and food prices have reaccelerated in Brazil over the summer. That's definitely happening. And as we've discussed internally, when we talk to people we know in Brazil, that's what they're complaining about. So I definitely think that has hurt Bolsonaro. But when you really look at the data, what's really striking is that overall inflation in Brazil peaked in 2021. It peaked a year ago in the summer. And it looks like the reason it peaked was because that's when they were experiencing the drought that dried up the hydroelectric source of cheap electricity. So if you look, I have a chart here from Bloomberg showing Brazil's daily hydroelectric electricity production. And if you look in August, September, October of 2021, it's like a big sag because it goes, in a wave as the year goes through. But then during that period, it really fell through the floor. And that's when you saw this spike in energy prices really more broadly. So despite the fact that food inflation has reaccelerated, overall inflation has been decelerating steadily since then. And you really have to hand it to the bank of the central Banco Central do Brasil, because even though I'm sure Bolsonaro would not want them to do this, they've been extremely aggressive in raising interest rates which I don't know if you want to speak to Brazilian politics or institutions or anything like that, but I find that really reassuring that the independence of the central bank is so well maintained that they can do that very proactively and aggressively in order to head off any inflationary spike. So yeah, inflation as of the most recent print is 8.6%. It peaked out at almost 40% in mid 2021. It's hard to even remember that it was that high.
I doubt anyone from the U.S. Fed is listening to this podcast, but if you are, maybe go and ask your compatriots in both Brazil and Chile what they were seeing, because those were the two countries that were hiking when everybody was still talking about inflation being transitory, and hiked really ahead, I think, of everybody else, and at very hawkish ways, like not these little 50 basis points, these little measly things at the beginning. Like they went hard and they went fast, and they're seeing some of the benefit right now. Politically, I'm with you. I think it's been refreshing to see the resilience of Brazil's political institutions, and they're about to get their biggest test yet, because it doesn't look like Bolsonaro is going to win, and he's going to be very upset about it. And he's already talking about, he's gotten in trouble a little bit for claiming that the Brazilian election system is littered with fraud, and he's been, casting doubt about the results, and he's got a very motivated base. So if you can get to an election and let's say Lula wins and Bolsonaro doesn't create a constitutional crisis and the Brazilian military is not out in the streets and we get the second coming of Lula. I mean, just look at what happened with Brazilian growth when Lula was in charge of the ship the first time. If you could restore that kind of stability and confidence to Brazilian politics, a lot of the things that you're talking about could rip. And then I can't speak as well to the sort of bottoms up perspective in Brazil, but and I know you said you don't want to worry too much about China and the commodity story, but if all this news about China's drought is for real, China's going to be importing agricultural commodities hand over fist, and that's going to be good news for Brazil, because they're going to export a lot of those agricultural commodities, and the prices for that, they're going to have to figure out how to balance that between rising food prices at home versus they're going to be able to make significant profits by exporting abroad. But that could be another, I guess, tailwind for the story that you're telling.
Well, if you look historically at when there have been coups in Latin America, which I believe there's only been 3 in the last 20 years. I was just reading this morning. I don't know, but it's much less than it was in the prior 20 years. Typically, those have coincided with very bad economic conditions and runaway inflation that has caused people to sort of despair. And I think I would take the under on the risk, even though it's already a low risk. I think we would agree. I would take the under because of the strength that we're seeing. There was an article in the Financial Times, I think it was, where they were interviewing some anonymous Brazilian businessmen who were admitting, I support Bolsonaro, and most of my peers do also, because times have been just so good. Business has been really good. And I don't think, any of that has to do with Bolsonaro, but that's not usually the stuff you hear before you're about to have a coup. I think that reflects kind of a broader health that's returning to Brazil, independent of anything politically that's happened. And that usually tends to support normal and peaceful solutions to things, rather than, extremists out in the streets.
I mean, if they can get there, Brazil has a lot of things going for it. If they're, I get asked a lot about Peter Zeihan, who's one of the other big geopolitical thinkers out there, and Brazil's one of the places I disagree with him most. He's been writing forever that he thinks Brazil's going to fall apart because of how expensive their infrastructure is, and I don't see it that way. Like, yes, they have infrastructure problems, but especially with Argentina just being an eternal basket case, like the board is set for Brazil to do great things if it can sort of keep its political situation somewhat in order going forward. So,
well, Brazil just posted its biggest government surplus since 2014. So it's not as if they're, spending hand over fist to generate this kind of activity that's going on.
Yeah, although who knows what Lula will do when he gets in there. Although he sounds like a different Lula. He sounds like he's more. It's weird the similarities between Brazilian and U.S. politics. He's pitching himself as a sort of the way Biden did on the campaign trail. Like restoring order, not going to shake things up too much. Like he's not the firebrand sort of quasi-socialist that was banging on the table in the early 2000s that everyone was afraid of. So,
well, his instincts, I think, were quite good in his first term. He did not veer too far into sort of state-driven planning and things like that, although he, obviously was more of a center-left candidate or presidential figure. So it's hard to see why he would become more extreme in the current environment where arguably he has less of a mandate.
Mm-hmm. Yeah. We've been going for over an hour, Rob. Is there anything else we need to tell the listeners, or shall we tell them good luck sorting through the rest of the developments in the world, and we'll catch you next week?
Well, I think we could go on for 3 hours, but I'm not sure that's a good use of our Thursday.
Yeah, we don't want to scare the listeners away. So, okay, Then we'll say goodbye, and we will check in with you all next week. Thank you so much for listening to the Cognitive Dissidents podcast, brought to you by Cognitive Investments. If you are interested in learning more about cognitive investments, you can check us out online at cognitive.investments. That's cognitive.investments. You can also write to me directly if you want at jacob@cognitive.investments. Cheers, and we'll see you out there. The views expressed in this commentary are subject to change based on market and other conditions. This podcast may contain certain statements that may be deemed forward-looking statements. Please note that any such statements are not guarantees of any future performance, and actual results or developments may differ materially from those projected. Any projections, market outlooks, or estimates are based upon certain assumptions and should not be construed as indicative of actual events that will occur.